Good, good day, everybody. Welcome back to the Comp Effect podcast. We are going to blow your mind today with the guest that we have on for you. Sam King is the Vice President of Fraud Investigations at Employers, which is a national workers' compensation company. And I had the pleasure to speak with Sam here a few months ago and learn a little bit more about fraud. And this guy's probably forgotten more than I even know when it comes to workers' compensation fraud. And so without any further delay, we're going to get into this today and talk about all things workers' compensation fraud and help educate businesses and insurance agents. And Sam, dude, thanks for taking time today. I appreciate it.
No worries. I look forward to the discussion and look forward to getting this information out to your team, your folks that are listening to the podcast.
Absolutely. So as part of the normal routine, when I bring somebody on, I do a little research on their background. I checked out LinkedIn, I searched for them on Google, and your name is everywhere. I think I first came across you in a business insurance magazine. I've seen you publish in Rough Notes. I find information that you have helped co-author on the Department of California's fraud website. Can you you've been everywhere, man. Can you give us a little bit of your background and history?
Yeah, no worries. I actually started out in law enforcement in California, in the Los Angeles area. And I was in law enforcement for 10 years. I actually got into insurance as a general agent, working for under a general agent, and then got my insurance licensing in California, started selling insurance. I wasn't selling commercial insurance. It was all personal lines. And it was a real up and down swing. It was a cop buddy of mine and myself did great the first year. And then the second year, we kind of didn't really do wise with our business. So he got back into police work. My wife basically said, "Hey, we have kids. You're a nicer person. Why don't you do something else?" And so I ended up bouncing back into the insurance industry. I went to work for Travelers Insurance actually, and I was ended up being the director of the Western United States for their SIU program, their Special Investigative Unit program. So I had about 13 states that I handled, and loved it, enjoyed it, and then I went from there to a Liberty Mutual company called Golden Eagle Insurance Corporation out of San Diego, and was the director of their Special Investigation Unit. And they were writing a lot of workers' comp business and other lines of business in California at the time. They were a pretty big player. And then I had a stint with some outsourced investigation firms, two of the largest outsourced investigation firms. I left Liberty Mutual. Actually, the Liberty Mutual company I was with, I got the Chairman's Award at Liberty Mutual for our Special Investigative Unit efforts, which was a huge honor, really, for my team, because we had an awesome team that worked for me there. But then I went to a national private investigation firm that did outsourced insurance and special investigative unit work for the insurance industry, and basically was an executive running their Western United States, in their programs in about 13 Western states, and then one I was doing nationally, running their whole national program. So
what do you get the Chairman's Award for?
It was we were recognized as having the most aggressive SIU program out of all the commercial line insurance business, and it was they were really looking at stats. We had in 1 year we over 56 criminal arrests that we were responsible for in insurance fraud, which is a big deal. I mean, to get a criminal arrest is a lot of effort that goes into that. And if you actually not just charged, but they're arrested and they're convicted, that's a huge thing. So we had that. But we had a history of about a 7-year history of that type of activity, and it just got bigger every year. It was we were getting better and better at what we did on an annual basis, and So it was that recognition, and Mother Liberty at the time, we were a small company compared to Mother Liberty. They had like 6 arrests, and we had like 56. So it was kind of a, I think that those numbers kind of like, wait a minute, what's this little company doing, and what's going on here? So it was one of those balancing acts of, they just we tilted things to where they said, hey, we had to look at this company, and ultimately I was leading that program, so I got the chairman's award.
We had a fraud investigation family business on here a few months ago. They're out of Minnesota, and this guy Don, he'd been doing fraud investigation for since the '80s, and he just talked about how they used to have the van with the big camera in it, and it's changed to mobile phones and maybe somebody tailing somebody or unmarked cars, and it was kind of fascinating to hear what his company had done.
Well, the cameras have gotten smaller, much smaller. We used to have, pinhole cameras, things like that, but they were only used if you were, following somebody inside like a grocery store or something. But now the cameras are so small that, commercial cameras are small. So you can do the same thing with that we used to have these big old cameras. It looked like somebody's following somebody, like a television crew was following somebody, and got away from that. It's, the cameras are very small now. They're very, it's all digital versus analog, which is a whole different world. And so there's, I kind of relate it to, solar panels now for houses are getting smaller and smaller. It's kind of like, that's what happened to the cameras. They happen really fast. So that's a good thing for us.
So the first time that we talked, and I think this is probably one of the most enlightening things for me, as an insurance agent that's been in the business, most times when we talk about fraud, it's because I get a call from one of our clients that say, I know that the claim that we just got on Billy is fraud. I know he's working on the side. I don't believe that we should pay for it. And the reality is, once there's a work comp claim, they get into the system, right? The employer's hands are tied somewhat.
Oh yeah, it's problematic for the employer. There's a lot of, obviously, if you're an employer and you have a claim filed against your company, and there's doubt, there's suspicion in regard to it wasn't reported, or it wasn't reported timely, or there was no witness, that kind of thing. Those all play into, the possibility of, possible fraudulent claim. Those are red flags, things we look at. But it doesn't mean it's fraud, but it means to be looked at. So those are valid complaints, valid issues. I think about if an accident occurs in the Monday morning accidents, they go right to work, and in workers' comp, they are injured over the weekend, and they go to work and they say they were injured on a Monday morning. And so we've had those. We've had, I really think one of the big areas that as an employer you need to watch out for is, I believe this, that people don't usually leave a company. They leave their direct boss. So if you have issues, if your direct boss is not, is not a good manager of people, that kind of thing, you may have issues, you may have problems, you may have retaliation claims that surface. And that's real problematic. So I think one of the things you can do as an employer is make sure you have good people that are good managers, and they're treating people right, and so you don't have those retaliation issues, because rarely people retaliate with a claim unless they're really upset at their direct boss. It's usually a big problem right there.
We actually just had a guy from the Institute on, Kevin Ring, and one of the things that he recommends is on the final day or on the separation, you actually file a piece of paper that says, hey, I don't have any workers' compensation claims that I'm going to report later on down the road, just as kind of a safety net for exactly what you're talking about right there.
Right. Yeah, I think anything you can do to, obviously that would attack the credibility of someone coming forth down the road with a workers' compensation claim. I think that's the, and that's that depending on the venue, that can be very, that can be helpful. some states are more liberal than others, so it depends on the state you're in
Yeah.
and the rules you're dealing with. I happen to be in a very liberal state, so I look at the liberal piece of that. California is not really a very conservative state when it comes to workers' comp and benefits, and we have some silly rules that well, I'm going to call them silly because I think they are, but silly rules that really hinder employers oftentimes with and cause increases in costs for workers' comp benefits.
Well, I think I learned the other day what LA County is the highest rate county in the country
Yeah,
for workers' compensation rates.
it is the highest, and there's a long history of why it's the highest. It's a lot of organized crime, a lot of provider fraud. The biggest area of fraud in the work comp system out here in California, and I think probably if you dig down, it's going to be many states, is going to be the provider fraud area where you're talking about doctors, attorneys, chiropractors, interpreters, anybody billing a file. And it's one of the reasons we have so many problems in California is the rules. We have a lien process where, if you are a doctor or a provider of a service on a workers' comp claim, you can file a lien with the Workers' Compensation Appeals Board and collect money directly. You don't have to go through the claimant or through the claimant's claim in any way. You can just go right to the board and collect money. And that's, there's a process for it. And it opens itself to all kinds of fraud. And we've had this lien system in California for, many years. It's been over 30 years. So
so walk me through that again, because this is new information to me. So you're saying if you have a claimant who has a claim that goes to a medical provider.
Right. So it goes to a medical provider. Now, what I'm actually talking about is if in California, if it's an accepted claim, we usually can control the rules say we can control the claim for up to a year as far as the medical, who they go to medically. But if it's a denied claim, they get an attorney and they dispute that denial, and then they start sending them, that applicant attorney can send them to whoever they want as far as medical providers. And that's where we have the problem, because if it's our provider that we're sending someone to, we have contracted rates, we have a medical fee schedule that's all adhered to in regard to what they can charge for certain procedures. If it's a disputed case, then all of that is thrown out the door. And so these doctors and providers, they bill whatever they want. And oftentimes they will bill, 10 times the amount of what should be billed in regard to the fee schedule, because they don't have to abide by that.
Mm-hmm.
And they'll try to collect on that, on their lien. If they collect 10% of that, they're collecting the entire bill of what would be paid to someone that was in our system. So it's the process is a little bit open to a lot of flaws in regard to the balances in the system. And the good thing is we did have because of the problems we've had in the past with provider fraud, and the prosecutors that were going after providers in California, they got fed up with the fact that they would try to prosecute someone criminally for criminal fraud, usually a billing fraud type situation, like billing for services that were never rendered, that type of thing. And then because of this lien problem, these fraudulent doctors would actually go out and they would collect heavily. They would put all this money into collecting money so they could finance their criminal defense. And that became problematic because they were hired the best attorneys, and now they're really they have a lot of money to do things with from a criminal defense standpoint, and a lot of people are getting off because they just they were able to finance the right people to handle their cases, and getting off on technicalities, that kind of thing. So what happened is the prosecutors in California basically said, look, we got to do something different. And they actually started this. They said that there was a bill, two bills passed in 2017, in 2016, 2017, in January 2017, it became law, One is, it says that if you are charged with insurance fraud, this is in the labor code in California, if you are charged with insurance fraud, healthcare fraud, or Medicare fraud, then you can be, and at the moment you're charged, then all of your liens can be immediately blocked and stayed. In other words, we don't have to pay any lien at the point you're charged with insurance fraud. That's one of the new rules. I say new, 4 years now, but
So when you mean charged, I mean, that's not an affirmation of guilt. It's just being allegedly charged with fraud.
right, you're charged by a prosecutor or indicted, either indicted or charged. If you're indicted, charge is usually used. That term is used when someone is criminally charged by a district attorney's office or something, or a prosecutor. It could be state prosecutor or attorney general. But and then there could be a grand jury indictment where you're indicted. It's the same thing. That is a charge. So if you're charged with insurance fraud or healthcare fraud or any kind of Medicare fraud, then we can immediately block any monies that could be owed to you under this new law. And there is a due process. You're probably thinking, well, is there a due process, for that, legally, what's going on? There is a due process. It's through the Department of Industrial Relations in California. And what they do is they are the due process is that they have to be afforded a hearing if, once they're convicted, or if they are not convicted, then they're afforded a hearing, and those liens are all basically dealt with at that time. So that money doesn't go away. They have an opportunity to collect. But if they are convicted, they can be removed from ever participating in the work comp system in California again. So that it's pretty some pretty stiff penalties now that we didn't have before. Before we would have to pay these liens and settle them in order to close a claim file. We don't have to do that anymore. There's a whole different world now since we've had these rules for the last 4 years. So it's a good thing. We still have the fraud. We still have the problems. I haven't seen the fraud go away. I basically describe fraud as that whack-a-mole, game. You go to the place where they have a whack-a-mole game, and you hit the mushroom or the clown, and it comes up, and then all of a sudden 3 or 4 more come up. And that's kind of the way we've seen. As soon as you're aggressive with fraud in one area and you go after something, we've seen big major doctors' offices and medical facilities that were, the whole facility was fraudulent. The main player goes down for insurance fraud, the owner, and all of a sudden, 5 doctors that work for this person set up their own independent thing, and they've already learned how to commit fraud. So now they do their own thing, and we have that kind of stuff happening all the time. It's not just,
the practice, like in that case, the doctor's office, do you think that it's one bad seed in there, or they're all bad seeds? Because that blows my mind that there would be an entire practice of doctors out there that are intentionally trying to be fraudulent and violate the law.
Well, I think there's a ton of money in it. That's the problem. We're talking about millions of dollars, and there's different schemes that go on. One of the schemes we've dealt with for years, and it still goes on, is a workers' compensation injured worker goes, it could be a disputed claim. They go to they get an attorney, and then they go to a doctor, and they have them sign a sign-in sheet, and they'll have them, sign their name, 13, 14, 15 times in different spots on sign-in sheets. Well, that's just so they can bill for services never rendered. They have their name signed, and they'll put in the dates later. And those people don't even come for treatment, but they're billing and sending a report like as though they did. So there's a lot of bad issues still going on. There's one of the biggest things we've been dealing with the last several years. It's been going on for many years. Is kickbacks for referrals, where a treating doctor, may send somebody out to for one we had was called it was a shockwave treatment. The shockwave treatment was, somebody had an injured back or shoulder or any kind of muscle part. they would send this shockwave treatment, and to be honest, the shockwave treatment, it was kind of like a superpowered TENS unit, if you will. And it would shock that area of their body, that muscle area, and it's supposed to do all this stuff, but it wasn't. There was no fee schedule on this tool they were using, right? So they could charge whatever they wanted, and typically they would charge about $1,600 for that treatment, maybe $3,200, depending on how they felt that day. And so every time he sent someone for these shockwave treatments, then this particular chiropractor, actually the chiropractor, would get a kickback, from that company. And it wasn't directly to his chiropractic facility, because that would be too easy to connect when you're following the money. But they actually set up two separate companies, and the shockwave company would from their separate company, they would actually send money to his separate company that he had, not in a chiropractic name, but some other name, and then funnel money back to him that way. So it gets very sophisticated in how these schemes are set up, but it's totally illegal. You cannot refer somebody and get a kickback or some kind of consideration or money for doing so.
And that's what was happening.
Yeah.
So I think one of the things that I found that was most interesting the first time that we talked was how I think you kind of said that the fraud in this country has switched. It used to be that it was employee fraud, maybe claiming, fake injuries to receive indemnity payments. And then at some point it switched over, and now that's not the case. It's really the provider type fraud. Am I getting that right?
Yeah, I from my perspective, and it really depends on where you sit and where you are in regard to what state and what's going on. From my perspective, I do sit in California, so there's a California edge to what I do. But what I'm seeing is that what I was relating to is that there's three types of fraud, if you will, in workers' comp in categories. One is claimant fraud. And that's where an injured worker that is their some part of their claim is fraudulent. And it could be any part of their claim. It could be they were injured at home, and then they go to work on a Monday morning and claim an injury, and we find that out. Or it could be they malinger their claim. We do surveillance, undercover filming, and we find out that they're moving their entire house and lifting and doing all the things they're telling a doctor they cannot do. And they lie about it. And so we end up with a fraud case. So claimant fraud is a big area. It used to be one of the biggest areas. I think one of the things that, if you look 10, 20 years ago in the work comp system, I think every podcast, there was podcasts now, right? They were doing podcasts. But every 60 Minutes, 2020, all these different big national news medias, they would always show someone, undercover filming going on where somebody's doing something that they claim they can't do. And that was kind of the big deal. We don't do a whole lot of that. We still have. Yeah. He's got a neck brace on, takes it off. Yeah. Typically, or got the cane, and he's walking, with the cane to the doctor's office. And as soon as he leaves, he throws the cane in the truck and he's playing basketball or something,
Yeah.
But so claimant fraud has always been there, but the area that has come up and we've been able to really do something about, there's tons of providers that have been arrested and charged and convicted over the last 20 years. For the first time, it seems like we finally got a lot of these big players, and it's still happening, but we've created a process that is working well in my state, and other states are doing this as well. It's not just my state, but what's happened though is provider fraud has become probably that's the other category of fraud. There's claimant fraud, there's provider fraud, and there's what I call premium fraud, are the typical categories. And claimant provider fraud is usually dealing with billing for services not rendered, or you're billing for a procedure that should have a much lower billing procedure. There's a lot of money to be made in that.
You're saying instead of like if there's a fee schedule for tier 1, 2, and 3, 3 being the most expensive, 1 not being the most expensive, and most people don't understand what happens at the doctor's office and the different level of fee schedules. They'll go in and the physician will do a tier 3 and collect excess money when it was really a tier 1 visit.
Exactly. And even you think about if you have healthcare insurance and you're billed for services, one of the requirements with healthcare, it's federally regulated, stuff like that, is they give you an explanation of benefit. Okay, so you get an explanation of benefits that were provided, so you can kind of inspect as a patient and see, well, was this provided? Did they do this service? In workers' comp, you don't get that. You don't get an explanation of benefit. There's no mandate to give the injured worker any kind of equity. So there's a lot of fraud that can go on that may not be tipped off because you don't have the claimant say, hey, I didn't get an X-ray, or I didn't get an MRI, or whatever it might be. So those are areas of provider fraud that occur quite often. But yeah, the 3-tiered, one of the big areas is, and it's kind of a national, we go by AMA guidelines for California, and most states use the AMA guidelines, is we have a comprehensive medical evaluation is a 99205. If you're going to get a comprehensive medical evaluation, that basically is a lot of rules that go along with a comprehensive medical evaluation, but it's going to be the highest billed medical evaluation. If you get a 99201, that's a medical evaluation, but that's the least billable medical evaluation. So people, typically what we see is providers will bill they'll bill a 99203 or a 99204, which is a higher. It's not the highest, because the highest they understand it's going to be inspected more. So they'll bill right under the highest, and those are areas that are open to all kinds of fraud, because if you start inspecting that, you find out that they didn't provide those services that are required to be provided to bill that service. So provider fraud that's another area of provider fraud, that happens all the time. That is they're providing a different class of service. And then premium fraud is our other category, and that can be involved in, basically any employer not paying their proper rate for workers' compensation insurance, and that can deal with an employer not reporting their payroll that they have and paying cash wages, or that type of thing, or they're misclassifying an employee. They're saying he's a janitor when in fact he's a roof tear-off worker, that type of thing. So it's really a gross abuse type of situations. But
so fraud hurts everybody. And ultimately it really hurts the businesses who end up paying for it in terms of what they pay for rates. Right. What do you think the percentage of fraud is? Like, is there a number that you can say out of let's just say 100 claims, we think this many number of claims is fraudulent as representative of the industry?
Well, I think the numbers that are used quite often is that 10% of all claims have an element of fraud of some sort. Okay. And that's kind of a national number that's been used. The FBI has done some studies. The Insurance Institute has done some studies. There's been several studies that have been done. And typically what they'll do is they'll do studies with asking the insurance industry and, people that run special investigative units like myself, asking us, what are we, doing surveys, and what do we see as the percentage of fraud that we're seeing. Of the 10% that may have elements of fraud, I think you're probably looking at maybe less than 2%. It's almost kind of like, as I've looked at this over the years, you think about credit card fraud with banking. Okay. Banks put in about a 2% factor for fraud whenever they calculate their earnings sheets and their spreadsheets on how much money they need to make to be successful. They have to put about a 2% factor that's going to go to fraud. Okay. And that goes with you have a credit card and somebody else gets your credit card number. They start charging on it. They report it, and all of a sudden you can't find that that 2% goes away. They can't find that person, you know. But they dismiss it from your bank account, right? You get that money back because hey, that was fraudulent. You sign some paperwork and get it back. Well, I think we're probably in that 2% category of real fraud that we can get our hands on. It may be higher, but that's the amount I see that we're able to prosecute, really go after strategically and get the evidence needed to pursue fraud.
So okay, so that's interesting. And one of the things that I picked up on that you just said is the elements of fraud. What do you mean when you talk about that? Like, what are the elements of fraud?
I like to use I use the term milk, and I hope we don't have anybody that's in the dairy business because they might get mad at me. But it's just an acronym, milk. Fraud is nothing more than a lie. Okay, so if you have basically fraud is the lie is the fraud. If you have a case where you might see somebody arrested for 29 counts of insurance fraud or 43 counts of insurance fraud, all that means is that they had lied 43 times. Okay, each count is a separate fraud, and they lied 43 times. So the lie is the fraud is a lie.
Okay.
Well, the elements you need to prove fraud, and I go back to my police days. I use every crime has an element. A lot of people think they've been burglarized. They describe that they've been burglarized when they actually were robbed. Or they were robbed when they were burglarized. They say, "Oh, I was robbed," and they were burglarized. And there's different elements. So burglary is entering into a dwelling with the intent to commit a felonious act. So you would talk about breaking and entering. It's breaking into a house and you take something, and those are all burglary, or a window smash on a vehicle. Those are the elements for burglary. So entering into a dwelling, the inside of a vehicle is considered a dwelling for burglars' sake, for the code's sake, but with the intent to commit a felonious act, the intent's usually the pry marks of the window smash or the tools used to take the stereo out of the car. Okay.
And that's not robbery. I guess I get confused here.
Yeah,
we're gonna. Yeah, I don't want to get involved in that. Yeah.
Robbery is the use of force or fear in committing a felonious act. So I show you my gun. Okay, well, that produces force and fear, right? Yeah, it's the use of force and fear. So it's like produces fear. Or I give you a note at a bank and I say I have a gun. If you don't give me all your money, I'm gonna shoot you. And I don't show the gun. But it shows. Or I run down the street and I pull a woman's purse from her being and I pull it away from her and run away. That's force, right? So use of force or fear in committing that felonious act. A lot of people get those mixed up. Okay. So, but they both have different elements. That's the idea. And every crime has an element. Insurance fraud, the elements I use the acronym MILK, is milk with a big L. The L is a lie. You gotta have a lie. Okay. Now the lie has to be it has to be material to the claim. So if I say I have a 900-year-old grandmother in a deposition, that may be a lie because I don't know anybody 900 years old, but it's probably not material to my claim. Okay, so it's got to be material to claim, whatever I'm lying about. And then the lie has to be, the second element is intentionally made. And intent can be proven by the fact they would have gotten more money, they would have gotten more benefits had the lie been successful. If the lie is successful, they would have got more money or more benefits. So typically that's enough to prove intent. And then K is knowledge, and so it's materiality, intent. The lie is the L, lie or misrepresentation is the term oftentimes, and then K is knowledge. Knowledge is almost like I have grandchildren, and when my kids are actually growing up, I would tell my son, one of my sons, I tell him, hey, don't ever do that again. Don't say that word, or whatever that word he was saying. Don't say that word again. And the next time, I knew now I had to put him in timeout, or I had to discipline him because now I knew he knows that what he said was wrong the second time, right? So I educated him along the way. Well, in workers' comp, in fraud, we actually have a lot of fraud warnings that we put on. You probably see them on agency documents, on anything submitted to the insurance company, underwriting documents. applications, there's a lot of fraud warnings, and it says it's insurance fraud to lie or misrepresent your claim, or to lie about your class codes or whatever it might be. So there's a lot of documentation, and that's how we show that they had knowledge. They were educated during the processing of the claim or the application, or even the on the actual form sent in for providers on the billing. They're educated on that. So those are the areas we have to show that they had not, what they did was wrong, and they knew it was wrong. They were sophisticated enough to know it was wrong. So typically, even on a claim form for an injured worker, you'll see in many states, you'll see in English and Spanish, you'll see the actual language of what insurance fraud is, and that's part of the requirements in a lot of states. And that's part of that knowledge. So if you got milk, if you have you can prove all 4 elements of milk, you can prove fraud. And that, I'm talking about criminal fraud for insurance fraud. And actually that is not just related to workers' comp. It's any type of insurance fraud that you're dealing with. Those are the elements you have to prove.
All right. It's interesting. I thought of you, or I was all excited to talk to you. Just last week in Iowa, there was, what was this guy? I think he was a chiropractor, and he kept presenting false information and identity theft. And he was basically using other insurance providers' identification numbers for 2 other chiropractors to submit fraudulent patient treatment.
Right.
So his and 2 other ones, same patient, fraudulent treatment. And when we talk about, is insurance fraud a victimless crime? No, it's not. This guy looks like he's going to jail, had a $20,000 bail bond, and it's a criminal charge.
Well, and that's what you're talking about. It's when you talk about insurance fraud, other than the stat studies, the FBI studies, other than tax fraud, insurance fraud is the biggest type of fraud there is in the United States. So tax fraud is number 1. And I'm talking about tax fraud, the ones they can't prove too, not just someone can prove, but the ones they suspect. That's the biggest. And insurance fraud is right there. It's number 2. So it's a huge problem. And that situation you were talking about in Iowa, that's all that is somebody that knows the system. They know how to get the document. They know what documents to send to the insurance company, and they're not even using their own name. And I would suspect that situation, the person they weren't licensed to do the procedures. They knew the system. They probably had what I've found is in the past is they probably had a mailbox that was just a mail location only for their billing, and they're using all this person's name, and they're just using a different location for the bills, so that when the checks come in, they can cash them. And that's oftentimes the case. We've gone and inspected what we thought was going to be a medical clinic, and getting tons of bills from a place, and we find out it's an empty little bitty office that's being rented, and there's nothing but but envelopes with money and checks being going into that office. So that's very common, and that's one of the schemes that goes on with people that know the system.
So let me ask you. We'll start with the insurance company. Tracking down fraud. Let's say employers insurance is trying to track down fraud at the provider level. And I'm guessing that's extremely, I think from my end, I think that would be extremely difficult, because most insurance companies aren't exactly sharing data on claimants and providers. So you kind of got to do your own work.
Exactly.
And that's the gaming of the system, right? If I'm a provider and I have a claim with ABC company, I have a claim with employers, I mean, I can probably game the system for a very long time before I'm caught. So So what are we looking for here? Or what do you do? What are you doing as a company to help reduce provider fraud?
Well, provider fraud is a major problem. And one of the things you've got to start doing is looking, as an insurance company or as a individual, you have to look outside the box. So typically and what I mean by that is you got to look at things that traditionally, are different than how we used to process claims, and things we looked at before. And one of the things that we've employed is we built a data analytics. I want to call it we call it Aquila, but it's a data analytics tool that is Aquila in Latin means it's like the eye of the eagle. So but basically we're looking for things that are not normal, but are typically red flags for provider fraud, if you will.
Okay.
So we put all of our data for providers on the billing. It's all related to, typically when you deal with provider fraud, it's going to be related to billing. They're billing for services not rendered. They're billing for, procedures that didn't occur. They're upcoding. They don't exist. They're using somebody else's name, like the Iowa case. They're not really a doctor, and they're claiming to be a doctor. They're using, so all these things occur. So we look at what makes sense, and so we look at red flags. So we built a tool that we can look at all our data. One of the things we do is, one of the key things that comes up is if you're in a city, there's no reason that you would be driving one way 75 miles to a medical doctor for treatment, to your primary doctor, right? I mean, that makes no sense. That's 150 miles round trip. What we found is, we have a tool that we can look at the billing, the service location where the service occurred, and we can look at where the claimant lives or where they work if they're still working, and we have a mapping tool, a simple mapping tool that looks at the mileage, and everything over 75 miles pops up. It's like, wait a minute, we got to look at that claim. We got to look at those, see what's going on with that, because that makes no sense. We look at things, that's a simple, kind of a red flag.
You've got machine learning that's looking at these things on every single claim, right?
Exactly.
And then you can aggregate that data to really kind of drill down.
And we look at, one of the things is, what if the, we look at if somebody's billing us for an MRI and it's not a hospitalization, it's very unusual that you would have an MRI done unless somebody was hospitalized at some point. Okay. So we look at any claim where we get an MRI and there's no hospitalization. We start looking at that, or maybe the MRI is like one of the first medical bills we get, and so the order of the medical bills and how we get them. So there's all kinds of things we want to look at that just, hey, that doesn't sound right. That's not right. And looking at the data, we aggregate all the data together. All of our data goes into this tool that we have, and it's populated once a week. So we're only about a week behind with looking at fresh data. So on Sundays, our IT department populates the tool with all the new data, and it just continues. So it's something that we look at as we have certain red flags we look at when we think there's a kickback for service, to other service providers. And we look at, red flags for that. What would be an indicator driving over 75 miles from your house to get a medical procedure? That would be an indicator of a kickback for medical services. They're getting a kickback for someone, and that person's not even billing what they should. They're not even going there.
Let me ask you, in those type of examples, that's provider fraud. In most workers' compensation claims that we handle, the provider will directly bill the insurance company. There's a good chance the business isn't seeing the bill, the claimant isn't seeing the bill, and the agent certainly is definitely not seeing the bill. And so it's kind of one of those things that we can't catch it. The claimant can't catch it. The business can't catch it. That's on the insurance company because you've got a bad provider doing, fraudulent billing at that point. Is that a fair statement?
That is a fair statement.
Okay.
And I think, if you're an employer and or an agent and you're working, you have clients that you're concerned about providers, in your area. The one thing that the intel we have is we kind of know, we don't know all the bad providers, but we know a few of them. And we know, their name comes up and go, oh, wait a minute, we know, where they're going with this.
Okay.
Yeah, so it's something those are things and information that we get. We work with organizations like the National Insurance Crime Bureau, who has a medical fraud unit that we get information from, what may be going on, so we can get it before arrests are made. We kind of know some schemes, what might be going on. There's other places we get that information, and it's helpful. So we kind of now the person handling the claim may not know that. Okay, so we have them check in with our special investigative unit at our company and ask us, and we try to have we do training for them on insurance fraud, usually semi-annually. And so we're actually, we're always bringing up the fact that we have an open line of communication, so they can refer these type of situations to us, and we can, even if it's not a formal referral, they can call in. We have a 1-800 number that we use for insurance fraud, and these are things that we encourage our policyholders, our agents, our everyone to call, to keep us in the loop on what you suspect. You may be onto something and not realize it. So that's what I'm trying to get at. And
so how would a claimant know? I mean, if there were red flags at the claimant's service level,
right,
what would they be looking for to maybe identify what provider fraud may be occurring on their claim?
Oh, I see. So
is there anything that they would know?
Yeah. I mean, if you're filing a claim, I mentioned earlier, one of the oldest things that's been done for years is anytime a employee or an injured worker is signing a sign-in sheet, and they're signing their name multiple times on a sign-in sheet.
Okay.
A huge red flag. I mean, that means they're going to bill whether that person's there or not. That should never occur. You sign in one time when you go see a doctor. You don't sign in, on a sign-in sheet, 10 times. I mean, that type of thing. Or, just any kind of major procedure. MRIs are usually pretty expensive. And if you have an MRI done, if you're an injured worker, you would know you had an MRI done.
Yep.
Or you would know you had a CT scan done. You would know those type of things because it's a very unusual procedure. And so just keeping in the loop and keeping in touch with the injured worker, it's okay to, as an employer, it's okay to talk to the injured worker and communicate with them about, and if they want to share information with you, encourage them to share information with you. So, I mean, it's not a problematic thing. Now, if they have an attorney and they're represented, there's some rules you got to follow there. They're a little different, but if they're not represented, you can talk to them about whatever, you want them to come back to work. And a lot of people think, get a little off there, but a lot of people, workers' compensation is not one of those things covered under HIPAA. HIPAA is always brought up, health insurance. Oh, you can't talk to them because that's, it's medical privacy under HIPAA. Workers' compensation is not, it is excluded from HIPAA.
Yep.
So medical bill and workers' compensation is totally excluded from HIPAA. Even as an employer, you don't have to worry about that. If you're worried about violating a HIPAA regulation regarding their treatment, you can ask about their treatment. I mean, it doesn't violate any of that stuff. So just be aware of that.
I think that's a good point. I think a lot of businesses, people don't forget that, or they don't realize that they can ask those things, and hey, how's your claimant doing? What's going on? Well, I can't ask that. It's HIPAA. No, it's not. Nothing. There's so many hands in that pot when it comes to a workers' compensation claim. HR, claimant, manager, supervisor. HIPAA's off the table.
Right. And so that's a big area for to look at. It's okay to, and I think if you have a truly injured worker as an employer, you want to know how they're doing. It's okay to call them, and if they're home, they're collecting benefits. It's okay to call them and see how they're doing. Check up on them, find out. Has the doctor told you when you might be back to work, or that type of thing. And if you can provide modified work for that individual, I would do that. If I was an employer, I'd have them. If I could do it, I would have them. Counting cars in the parking lot just to be at work. And stay away from all these ads that play during the day. For attorneys 1-800 number is called, this injured hotline, that kind of thing. So I mean, because once they get into that system, you get into those bad players that we've been talking about.
We've talked a lot on this podcast about changing the human experience of the workers' compensation claim, and to go back to your numbers here, let's say 9 out of every 10 claims are not fraudulent; they're an honest to goodness accident. The employee didn't ask to get injured, and if it's a lengthy claim where they're not actively at work, people are meant to work. We're meant to be social. We don't want to be, isolated all alone.
Right.
And so we have encouraged businesses, reach out to your injured worker. If they were a good employee the day before the claim, they're still a good employee the day after the claim. Bring them
Exactly.
to work, give them meaningful work. And maybe I've always advocated for just even somebody within your company to be like the claim navigator, like help that injured worker and be a voice for them, because a lot of people get scared when they have that workers' compensation claim. Maybe they're not actively at work. Maybe they've got some reduced finances at home. Maybe that they're injured, that they can't do the things that they used to do, and it just becomes a stressful time.
Oh yeah, and I think the area that's huge. That's a huge area that an employer should really think about. Doing the right thing in regard to an injured worker. It's good for you to be involved in that process and let them know that you do care about them, and that you're there, and and you can ask them their progress, how they're doing. Now if there's fraud involved, if it's that 1%, or that 10% category, one out of 9 that is fraudulent, you may find out information. You might hear noise on the phone when you're talking to them, that they're not really at home. They're working somewhere, they're doing something, or they're out they're out at the beach or whatever. Those are things that we look at as well. So it's that communication is very important.
We're about running out of time here, and I have so many questions that I wanted to ask you. Oh my gosh, so many things. Real quick, can you tell us about one of the biggest fraud cases you uncovered?
We had a case where we had a chiropractor, and I mentioned the situation earlier, but we had a chiropractor that was had the same regimen. He would bill for services, and then he would send everybody to the same shockwave treatment, and then he would get a kickback for that, and then he would send everybody would be represented. Everybody that went to him was happy to be represented almost by the same attorney, who was getting a kickback for them sending him to that attorney, which is illegal. And then we had the same individual sending him out for an MRI. MRIs were about $3,200 from this facility for each MRI, and there was a kickback going on there. This was huge in regard to the industry. We believe ultimately the chiropractor, the attorney, people that own the Shockwave Treatment Center, the MRI facility, they were all indicted and arrested and charged by federally and by a state district attorney's office. We were very actively involved in that particular case, but we're looking at a fraud was just out of that whole situation was over, I think it was $350 million.
Was in comp fraud.
In workers' comp fraud, and that was in this one state in California. $350 million of billing, fraudulent billing that went out the door. I mean, and every piece of if you talk about billing for services never being rendered and just sending a bill out, that occurred with all of these. There might have been one treatment out of 10 that was actually a true treatment and had a bill that was legitimate, but most of it was fraudulent. And but they were indicted. They got some prison time, and there's a couple of them are still serving prison time, and so it was a very successful case. We actually are we were able to stop payment. We got some checks back, and we're able to credit claims with restitution, criminal restitution checks, and that's a successful part of this, because now we can go back and eliminate that exposure from the employer's history, and by reducing that claim exposure. So that was helpful as well. But yeah, we've had several successful cases, but that's one of the bigger ones that we were involved in, that came out of Southern California.
That's a great story. And I think if one of the things that I'm going to take away from that is I'm probably more granular when it comes to actually meeting with businesses and clients. And there are so many times that they will say, hey, this claim is fraudulent. We need to get a special investigation team on there. Well, the claim estimated cost is probably $5,000 or $10,000.
Right.
And the message that I want to take away and share here is that's not going to happen. It's not realistic. I understand that there may be some fraud there. If the claim is that little,
Right.
we're not going to put any money into it because you're focusing on things that are $350 million.
Right. And it's at the same time, it's not a wise use of your time on those claims.
Mm-mm.
Because you can resolve those claims, at a very minimal amount, and the exposure goes away. You could actually spend more money investigating those claims than you would paying the entire claim out. So there's a balance there of what are you going to do, and so you got to look at what is the right thing to do, and ultimately how can we save money for the employer through this process. So
see something, say something. I like it. What, anything else you want to talk about today here before we, any tips or advice or?
I think for an Asian employer, my tips are, I'm going to give you our top 10 that we put out there real quick.
Okay.
One is Monday morning reports of injuries. Okay. We talked about that during this presentation. If you have a Monday morning accident and it's unwitnessed, okay, that's a big trigger right there. If there's an employment change and all of a sudden there's a retaliation claim or something changes at the employer, there's a grumbling that he doesn't like his boss or something going on that way, and there's a claim filed. Be cautious of those kind of things. We talked about suspicious providers. If you get into that circle and you get feedback that there's a provider that's doing some weird stuff, be aware of it, or they're really far from their house. There's no witnesses to an accident. That's always a trigger. You don't have to have witness. An accident doesn't have to be witnessed, and it won't, to be accepted. But at the same time, if there's no witnesses and it's an area where there should be witnesses, that's a huge, something you want to look at. One of the things I also recommend is that you put, if you can put cameras in your workplace, put cameras in your workplace. Put as many as you can. I mean, you can get cameras. They're so cheap now. It's so worth it. That's one of the best things you can do is have video evidence to prove that an accident did occur or did not occur. Okay, and you want to know, did it occur? Did it not occur? And so put cameras in. If there's conflicting descriptions of how the injury occurred, okay, and typically you see this where on the claim form, the employee submits a claim form saying how he's injured, and that doesn't go well with what he tells you as the employer or the agent. If you're involved in this, they tell you something different, or they tell the doctor a complete different story, and you're looking at these like, what's going on with that? If they have a history of filing claims, that usually is a trigger. They know the system, they know how to navigate, they know how to get money from the system, and they have knowledge. That's something you want to look at. You always want to look at situations where treatment, they claim they have an injury, but then they're refusing treatment. That could be an indicator that, they're trying to hide something from you. They had another injury, maybe they had a prior knee injury, and they're claiming a knee injury. They don't want you to know about that prior injury. So they're actually refusing treatment because they don't want you to know they got old scar tissue in there, and when you're doing some of the evaluations of that.
And it's going to come out. It's always going to come out.
Well, yeah, it's going to come out, but you'll see some weird stuff when it comes to an injured worker if they're trying to pull a game on you. Any late reporting of a claim, obviously, if they don't report it, they wait 60 days to report that they were injured, or 30 days. I mean, those are red flags. Anytime you're dealing with somebody that's supposed to be injured, your claimant, supposed to be injured worker, and you can never get a hold of them on the phone. Okay, so you're calling to check up on them, see how they're doing, when they might be coming back. But you can never reach them. That's kind of a red flag. What are they doing? They're supposed to be at home recuperating, right? I mean, you think their phone would be right next to them, you know? So, um, and then any changes in their when you start seeing a injured worker, they change a treating physician. They go from one treating physician, now they get a different treating physician, or they get a different doctor. You know, they want to. They're not happy. Maybe that doctor is going to send them back to work, and now all of a sudden they get a different doctor. Those are red flags to look at from an employer standpoint. I think you know, and not every red flag by itself might not be enough, but it may be a couple of those things. You know, two or more of those type of red flags. You know, you need to reach out, talk to your insurance company, talk to your SIU department for that insurance company, the fraud unit, and you know, let them know that you have concerns about that particular claim.
Got it. And that was a document that you actually wrote and published somewhere, I think I saw. Is that?
I think we have that in our one of the things we give out. We we have a lot of red flags, but those are key 10 red flags that 10 warnings that we use, and we have published some that document. But and we flesh that out of all the different things of what you should look for as an employer.
I will, for the listeners, we'll post a link to that in the show notes, so you can easily find that if that's something that you want to focus on at your company.
All right.
All righty. Well, hey, Sam, before we leave, I do have a couple questions for you that we ask everyone who's on the show. What are you reading right now?
What am I reading?
Yep.
I am reading actually a book. It's called "Steal My Soldier's Heart," and it's my brother was in Vietnam, my oldest brother, and it's a book about his actual infantry, and it's about how they were the worst unit in Vietnam that became the best unit under the command of one of the colonels that wrote the book, and so I'm reading that right now. That's on my desk, and that's what I'm going through.
We're gonna put that in the show notes too. Is that a new release?
You know, it's an old release, but it's there it is.
Awesome, thank you.
Backwards, "Steal My Soldier's Heart."
And that's your first time reading it?
It is. My brother had told me that his old colonel had written a book, and I never knew which book it was. And then I finally did some research and found it, and I'm like, it's pretty good graphic and pretty amazing too, of things that occurred. So
I will add that to the list. I ask everybody what they're reading, and I'm always amazed at, you know, where things hit home and what little information I can take away and add to my own life. So that's cool. COVID right now, what are you spending more money on than you should?
You know, for me, it's Uber Eats, Grubhub, all the foodies. You know, and what's interesting for me is I think I'm just getting lazy because I can get in my car and go through a drive-through, go do all that kind of thing. And we're starting to open up in California more now, and we were shut down for a long time. But yeah, I find myself to being lazy. It's so easy to have somebody bring food right to your door, you know. So
there's nothing wrong with that. I totally get it. And then we're going to end the podcast today with whatever message you would like to leave with our listeners, whether it's work comp or personal or whatever it is.
Well, I think one of the areas I brought up earlier, and I think you need to think about as an employer, is really look at who your supervisors are, your managers. Make sure they're treating your employees well. You could have a problem at your employment and not even know about it until all of a sudden you have 3 or 4 claims, and it happened to all work for the same manager or supervisor. And if you're a supervisor or manager, think about that. Be a good manager and treat your employees well. Do the right thing. Don't be the jerk that people talk about. So I mean, that's something to consider, because people don't leave the employer. Typically, they leave their direct supervisor.
Thank you so much, Sam. Appreciate all your help, all your advice, and all your wisdom today for businesses out there. Have a great one.
You too. Talk to you soon.